Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we're looking for a 5-wave structure to the upside, soon to be finished, for then a 3-wave corrective structure down and continuation in the bullish scenario. And in the bearish scenario, you like to see a move towards the downside, hitting this high over here at 38.6k, which would increase the probabilities of then continuation to the downside. In this particular scenario, you can see that price is testing resistance that I had on the chart over here, the blue box between 31.1k and 31.3k, which also includes this daily naked point of control at 31.250, which so far has been perfectly respected. Of course, if candle starts to close over here, that would be more bullish, and if price would now range below resistance, maybe build some bullish CVD divergences, one can expect continuation to the upside and eventually the highs at around 32k to be taken. What is also important is this key level that I spoke about in the previous video. Now, in the previous video, price closed a candle over here, which was inside the gap of this red candle. You see here a gap, inefficiency, fair value gap, whatever you like to call it. But the moment you close candles inside this gap, the probabilities are very high to touch the white line and basically fill the gap. Now, what you can see over here on the chart is that price retraced to the white target box. That is important as well, because the moment a target box is cleared, or at least it found resistance, we broke through. I always make it white, keep it on the chart, because it can then act as support. Price moved towards the downside, hit this little order block over here very nicely indeed, for then a move towards the upside to reach the target that we were looking for, the key area at 31083 on my Coinbase chart over here. So that is now hit. We can remove this one from the chart as well. And now we just wait and see what price is going to do here more locally. In the more bullish scenario, we expect continuation towards the upside. In the bullish scenario, we're then looking for a potential triple 1-2. So we have a wave 1-2 in green, 1-2 in blue, and then a 1-2 in white, where now you want to see an insane push towards the upside, where you want to see volume increasing. And currently, that's not really what we see yet, as volume on average is declining while price is moving to the upside, which can increase probabilities for a potential 5 and a bit of a retracement. But what you eventually really want to see is price moving to the upside with volume moving to the upside as well. Little bit awkward though that this wave 1 and 2 are bigger in time and price than the higher degree Elliott wave count in green, but sometimes we got to take it with a grain of salt. Most importantly, at least, is observing the reaction here. Now, if we look at the support areas, just in case price is going to move to the downside, then some areas to look for are as followed. First of all, this blue box between 29.2k and 29.4k, then the one between 28.2 and 28.5, and if we then move lower, the next one 26.8, 26.9, and the lower ones, well, they're not yet too relevant, right? We first got to wait and see what price does over here. More locally, if we look at this final push towards the upside over here, after we had a zigzag to the downside, then a wave 1, 2, 3, 4, that is what we were talking about, finding support in the 382 and the 05, most common target for a wave 4 as well, taken from the low to the high of 3, very nice indeed, for then a bit of a push towards the upside, which has the potential to then be a wave 5 in a 1, 2, 3, 4, and then a wave 5. Most common target for wave 5 is between a 1.236 and a 1.618, pulled from the high to the low over here, and then you would expect price to move towards the downside. Now, as you can see, volume is very, very high, and the volume over here at the moment is higher than in wave 3, which is not really a characteristic for a wave 5. By far most commonly, the volume is highest inside a wave 3. So the fact that the volume here in potentially the end of a wave 5 is higher than in wave 3 could give more probabilities to continuation to the upside. And as mentioned, the moment you start to close some higher time frame candles over here above the daily naked point of control, continuation is definitely on the cards. And if we range here with bullish CVDs, continuation is also definitely on the cards. The invalidation over here can be removed, because if a potential 5 is in, we would then expect a retracement towards the downside. If we look at these CVD divergences, they have been building bullish CVD divergences all the time. Over here, we had bullish CVD divergences, higher low in price, lower low on the CVD, and also more locally over here on the 3-minute chart, bullish CVD divergences during this retracement over here for then price moving to the upside, reaching resistance, which is now potentially clearing for then a continuation to the upside. Now we also have news today. We have news on Wednesday, or not today, sorry, this week. We have news on Wednesday, 10:35 p.m. Central European Time, and also Thursday, 2:30 p.m. Central European Time. You can see the red flags, which can mean volatility on the chart. Not that we are lacking volatility in the past week. It's been awesome, but of course it can increase probabilities for volatility, so make sure you trade safe. If we then finally look at the probabilities of these scenarios, I kind of already mentioned what I would be looking for. I would observe the reaction over here. Currently, with the candle that is forming, we are above the daily naked point of control. The moment you start clearing these candles, or at least clearing this high and move to the upside, close candles over here, probabilities really increase that we are just going for new highs and clear the 32K barrier. But if we start to see resistance over here, maybe a bit of a range to the downside, a retracement, bearish CVD, that is the moment we could be looking for a move to the downside. So it's all about observing the reaction, but at the moment it looks quite punchy, and I would say that probabilities are higher for price to move to the upside, also because on the 15-minute the volume is so high, and it is higher than in wave 3. The fact that the volume is higher could indeed give probabilities to this move to the upside still being part of a wave 3, where then only later we get a 4 and a 5. So that's something to take into account. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.